All right. Happy Friday, everybody, and welcome back to another episode of the Real Estate Investing Club. We got some clouds this Friday. I thought we were going to hold on to that sun for a little bit longer. I actually have a golf charity tournament tomorrow. It's one of those. It's best ball. I absolutely love best ball golf tournaments because I'm not that great at golf, and so I can just lean on my teammates to do better than me. But I'm hoping we get sun, and I'm hoping you guys get sun wherever you are. It's going to be a good day because we got Denis Shapiro with us from SIH Capital. Denis invests in affordable housing as well as hospitality or short-term rentals, short-term, midterm rentals. So it should be a good one. Denis, thanks for hopping on the show.
Gabe, a pleasure to be here, ready to rock. Coincidentally, we got clouds where I'm on the East Coast as well.
Yeah, man,
No
what is
escaping
going
it.
on? I was hoping to hold on to that sun for a little bit longer. I told you before we got on here, we always start with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and just tell us how'd you get here?
Yeah, so I started when I was 14. My oldest brother gave me a copy of Rich Dad Poor Dad. Read it kind of at that point in my life, I was a cynic. I was like, yeah, I think this guy's probably making more money on these tours than anything else. But I got out of the book. One main thing is like, hey, I should really be buying assets. I was 14, worked a part-time job. So I started investing in mutual funds. Then I went on a whole journey of trying to be like the next Warren Buffett, went to business school. Unfortunately, I went to business school during the global financial crisis, and I was
Yeah,
in New York City at the time, so I was right in the heart of it.
that's
Um,
intense. When did you
yeah,
graduate? What year did you graduate?
my bachelor's in '09,
Yeah,
so I was literally
the same year as
'07.
me. Yeah.
Yeah, and then after that I went and got my MBA. I don't know how I convinced my business school to actually take me with no work experience whatsoever. And then while I was working at my MBA, I got recruited by the government.
Okay.
And when I got my first real W-2, I was like, wow, they're not only my employer, but they're my business partner because of the amount of taxes they're taking out. So I went down like a rabbit hole, went home, searched for like how do I pay less taxes, figured out really, really quick that real estate was the best option. Sorry, that's on my mouth. Real estate was the best option. And sorry, one second.
It's all good, man. Go grab a drink real quick. We'll wait. It's all good.
Just give me 1 second.
Yeah. No worries. But yeah, I mean, so many people have come on this podcast and talked about how they started down a path um of getting that W-2 and then realizing that not only are they losing a lot on their taxes, but they're also not super secure. Like any W-2 is it's there's not as much security as you think, even if you feel like you're extremely secure. And so people always start looking for that other option, which a lot of times leads them to real estate, which I love because real estate is in my opinion the best way to achieve that financial freedom that people are looking for. But yeah, I'll let you hop back into your story.
Yeah, thank you so much. I had a protein bar before the call, and
Yeah,
apparently,
sometimes they're chalky and they
yeah,
get stuck
chalk.
right there.
I tried fighting through it, and it just got worse and worse. But so back to the story. I got my first W-2. Wasn't really happy about the amount of taxes that got taken out, so I did probably the stupidest thing you could do. I called my oldest brother at the time, and he had a couple of properties in low income areas, and I said, "Hey, I think I need to buy something. I need some write-offs. Do you have anything you want to sell?" And never ask a real estate investor what they want to sell. They're literally always going to give
Here,
you the
take this piece of crap.
take this piece of crap over here. But I look back at it. That's probably one of the most pivotal moments in my life. It was one of the stupidest things I could have done, but in terms of life lessons, it was chock full of tons of valuable information. I got to manage that property by myself. I got to manage, a low income area. I had evictions, police reports I had to do, the whole 9 yards. I realized I did not want to scale this at that point. But I still wanted to keep investing in real estate. That's kind of where I stumbled onto like private equity, and I started investing in some securities. And then I found out about multifamily, private equity and syndications, and that I could do this as a limited partner. So I went heavy into that over the next 5 years. I just did 20 or so limited partner deals. And then from there, I started actually getting onto the operational side. And the couple of properties that I'm an operator on is the affordable housing and the hospitality, and those are all based on relationships that we've created over the last 5 years or so. But yeah, so that's basically the pathway. It started as a young, naive stock picker that was going to take over the world to a government employee. I since retired from the government, and then the transition was from individual investor to limited partner to the general partnership side.
Yeah. Yeah, it sounds like a good trajectory. A lot of people that I talk to in real estate, they dabbled in stocks before they got into real estate. I definitely lost money in stocks, and then I realized like this is not the path for me. I had some wins, but then I had some major losses, and I'm like, that's not me. But yeah, it's interesting that the first time that you really got your hands dirty in real estate was in low income housing, which can be super hard. That was actually one of my first properties I bought in a low income area. And you just deal with all the crap, but it's a good opportunity to learn, especially if it's at the beginning of your career, because you're starting out at the worst of it. You're like, all right, it's only up from here. So I'm sure you pulled a lot from that experience, even though you did have to deal with those hard things. Do you feel like starting as an LP, so you bought those low income houses and then you started investing as a limited partner in deals? Do you feel like being an LP before taking on your own deals as a GP was the right way to do it? What did you get from your LP experience?
It's so funny because in the last 3 years, there's been so many new syndicators and operators out there.
Mm,
And I don't want to toot my own horn, but if you don't invest as an LP, like how do you know like what is the correct way to communicate and what
mm,
is the
mm-hmm,
right amount of information and what is marketing that goes too far?
mm,
Like all of these things that I think we got into a world where a lot of operators went really quick into coaching, and you saw
mm-hmm,
it all over the place. It was like, oh, I quit my job 2 years ago. I'm at 600 units now. Now, if you want to know how I did it, here's this $25,000 coaching
yeah,
class. I'm like, well, what do you know after 24 months? You know what I mean?
yeah, yeah,
So I think this is the correct way in hindsight. I
mm,
think I don't regret anything. I don't care that it took me 10 years to get here or 12 years, whatever it is. But I felt like, I made so many incredible connections as a limited partner with a lot of people who are now my partners and my investors. And I don't think I would have been able genuinely to create those relationships if I was just a GP talking. I also don't think I would have had any credibility
mm,
talking if I didn't do all those deals where I had a lot of data on what deals worked, what I wanted to stay away from. I knew early on, thankfully, like the deals that worked well for us were always the ones where debt wasn't an issue.
mm.
And you
Go
know,
further into that. What do you mean debt wasn't an issue?
that it had a long-term fixed debt
Ah,
from
okay,
day one.
right. Yeah.
And we're in an era right now where a lot of the headlines are scary with commercial real estate, but they're really only scary if the financing is wrong.
Mm-hmm.
And I was fortunate enough with some of the people who I did use for coaching and relationships that I was steered on a fixed rate pat very early on, where it was almost like cult like if the deal doesn't work with fixed debt, stay the F away from it.
Yeah.
And I've learned that. So I also didn't get into a whole bunch of deals. And that actually also allowed me to really focus on the few deals that we did have. And then it kind of put things in perspective where, we saw so many people going 0 to 1,000 units, and they got into so many operational issues because it's like almost any business. It doesn't matter that it's real estate. It could be running a dental shop. If you go from 0 clients to 1,000 clients, and if you didn't put the
You don't
systems
have
in place to
the
handle it,
systems, the structure.
Yeah, so we were fortunate. Those LP deals allowed us to learn a lot from what deals went bad. It allowed us to have a very specific philosophy and culture that we developed and we ingrained at SIH Capital Group. So, like, I think the simple answer is like yes, but I don't want to understate how significant of a yes. This would be like a yes with like 20 exclamation points, I would say, if this was like in an email.
that's, that's a lot. Yeah. Uh, Something that kind of stood out to me when you were talking is you mentioned investing in those LP deals helped you understand how to communicate to your investors. And I feel like that's super important because um, when you get other people investing in your projects, it is so often you feel like everybody knows what you know. Like you're going, you're doing the things, you're fixing doors, you're making improvements, and you feel like just people know that progress is being made. But that's not the case. Like everybody, they put $50,000 into your deal, and now they're sitting there. They don't hear anything. It's human nature to start to think negatively, and so they're thinking, "Oh crap, he hasn't talked to me. What's happening to my 50,000? Is it gone? Is the property burned down?" So understanding, I'm sure, going through that experience and understanding how important it is to communicate to your LPs. Um, it's something that you guys take to where you are today. And do you guys, you're bringing on partners, you're doing syndications currently, right?
Yes, so we bring on both LP partners, and then if it's a smaller deal, sometimes we'll just do it as a joint venture.
JV. Okay.
So we go back and forth. We
Mm-hmm.
lean towards the LP syndication route on
Mm-hmm.
most deals we do, but there are one and off deals. But I think what you said is so true. We had our one of our hospitality investments that we made was 9 beach cottages
Mm.
in a shore area, and the funny part is we're also my company also has an affordable housing division, and when we bought that property was all Section 8,
Mm.
but it was 4 blocks away from the water. That was not its best use, and they were also dilapidated. They were falling down. They were the whole 9 yards. So we bought the property, and we told our investors from day one, like this is a 2 year project.
Mm.
We really don't know how long it's going to take. Like we're in New Jersey on this property. I know Seattle, Washington is also very, very not landlord friendly in most cases. So it's a shitty thing to tell investors that it might take 6 months to get 9 people out, or it might take 6 years, and your business plan will
Yeah.
have a
Just don't
very
know. Yeah.
you just don't know. And this was during COVID. This was right after COVID. So
Mm.
we don't know how the courts were. Fortunately, we got everybody out within 12-month period, with a mixture of some very creative legal strategies that we employed. But because of that unknown, we told our investors from day one, do not expect to see cash flow for 2 years.
Mm.
Like, do not. And on top of that, we have to take these units from basically Section 8, where they honestly should have been condemned if this town wasn't so desperate for affordable housing. They probably legally should have condemned it
Mm.
because there was foundation issues, there was roof issues, there was the whole 9 yards. The windows didn't work. Like this thing was out of like a HGTV before and after special. And we went in there, and for 2 years, every single Friday, because this property was 25 minutes away from my house, for 2 years, we went in there, and every week we showed the progress of the property.
Oh wow. Okay.
And the
That's great.
investors got that.
Yeah.
And I didn't get one question in those 2 years of where are my distributions. And that is like, it's such a trust builder. It's like, hey, we're on site, they're seeing it. And we actually waived all management fees for those 2 years. We actually that one is a special deal because we're not taking any management fees until all investors get all our money back.
Mm.
So we're like, hey, we're not getting paid, and look at us. We're here every single Friday. Well, at least I was there every Friday. My other two partners on that deal, they were there randomly during the week as well. So the general partners are on site 3 out of the 5 days a week. We're taking videos. We're walking through the properties. We're walking with the construction manager. We're doing the whole 9 yards. And that builds so much trust. And I think a lot of newer operators, they're so focused on acquisitions.
Mm.
They don't understand how important like investors are to their
Yeah.
deals, because when money was loose and easy, I think you underestimate like how difficult it is, or how much responsibility you're taking on when you're taking someone's capital. Like that is someone's college, that's someone's kid's college money. That is
Yeah.
someone's retirement. All of those things, they're credited, obviously they should have a certain net worth, but it's a huge responsibility. And I talk to other operators and I don't get that from them. Not some I do, and the ones I don't, like, yeah, we're never gonna partner because like our investors are our livelihood, literally. And it's like if we're not willing to communicate weekly on a project like that, like we're not in the right business.
Yeah. Yeah. I mean, and on the GP side, it's almost scary to take other people's money because I would rather lose my own money than somebody else's money. And so you really have to go into this relationship, this business relationship that you're creating with a lot of just I don't know the correct word, but really having respect for what you're doing, how much trust they're putting in you for taking their money and improving the property and bringing a return on that. So going a little bit deeper into the communication portion of this, we're kind of segueing into the end here, but I wanted to ask. So for that one, every Friday you would give them, updates. Generally, when you do these deals, do you do a monthly email, a monthly webinar? How do you update your limited partners?
So it all depends on the deal, and also depends. So something I've learned early on from one of my mentors slash coaches is that the deal will dictate how much you need to communicate, but then the communication has to be consistent based on that.
Yeah.
So, for example, what we do is if we buy a new property, usually if it's a stabilized property, it's not a property that is going to go through 100% renovation. We usually do monthly.
Mm.
And then the goal is once the distributions start hitting a certain level, we classify that asset as stabilized, and then we do quarterly going forward.
Yeah.
And then if for whatever reason a distribution is lighter than expected or something, we go back to monthly until we could reclassify it as stabilized. So that is something we've learned, and we have an incredibly high percentage of like our email opens and actual
Mm.
people. So we know people are actually reading
People
this.
are reading your stuff. Yeah.
So it's not too much, it's not too little. And we've done it. We've done it where there's a couple of issues that are popping up and they're causing us, like we had in one of our properties, because of the slope of the property, it's not private sewer, but it requires a pump that they call it the Muffin Monster. It's a really silly name. But what it does is it takes all the sewage in the property and then it crushes it and makes it like muffin size, and then it sends it over to the actual city sewer lines, right? So it's
I
called a
have
Muffin
never
Monster.
heard of that before.
Yeah.
It's
And
basically a trash compactor for sewage.
yes. Yeah. So it's very common in the mobile home park world, but we have one property and one multifamily property that is 50 units and it has one of these. And when we bought the property, one of the contingencies were they were going to switch it out to a brand new because we noticed during the due diligence that they had incredibly high maintenance costs on this thing. So we inquired about it. We found out that it was the wrong size Muffin Monster. So they actually replaced it. It was a $55,000 piece of equipment. So we thought we were in the clear. And then a year into ownership, the Muffin Monster malfunctioned. And
I'm
it
glad you
was,
guys stuck with that name. That's a good name, the
I
Muffin
think that's
Monster.
its actual real industrial name, by the way.
Funny, I own a couple mobile home parks, and I'm pretty. I would say I'm fairly up on that world. I have never heard of this technology.
Really?
Yeah, it's
I'll send
that's
it to you. Maybe
interesting.
it's a Northeast term. Um, but the Muffin Monster malfunctions, and they had to call in the sewage trunks to pump it out. But it was like a $20,000 hit. And basically, the emails went from monthly at that point to weekly right after that. Until
Right.
the Muffin Monster issue was resolved, we had a better game plan going forward with it. And then we went back to monthly. And then now thankfully, it's 2 years later, it's on our stabilized list. and now we could go to quarterly. So it's all about, I think, the trajectory thing. And then it's also really important to communicate the fact that you are going to be switching to quarterly. So when we were approaching stabilization, we started saying like, hey, these are the last three things we're looking for. And it's usually it coincides with increased distributions, making sure our occupancy level, like with affordable housing, we're in the high 90s. So make sure that the occupancy is like 96 plus percent. Make sure that the distributions have been trending upward and is approaching either approaching or past pro forma, blank, blank, blank. And we would say it on like, hey, we're in October. In January, if we hit these three last remaining metrics, we're switching you over, guys, to quarterly. If there's any issues and we no longer hit those metrics, we go back to monthly. So it wouldn't be like a surprise. It wouldn't be something that people are like, well, where is this coming from? Basically treating people with respect.
Yeah.
And this is kind of where I was an LP investor. And I remember one of the operators I invested in, he did a refi like in 2021. And I remember he did it as like a bridge loan. And I was like, and I messaged him. I'm like, look,
He
we came in
refied
as
his
a bridge
property as a
loan.
bridge loan. Wow. Okay.
Yeah, he refied it, and his explanation was that he felt like there was a lot more meat on the bone, and he wanted like another year, and that bridge loan will, with no prepayment penalty,
Hmm.
would allow him to really maximize the value. But I'm like, you've had this property since 2018. It's been 3 years. You're now over 90% occupancy. I was like, I'm like, I don't know why you didn't go agency at this point to give yourself some wiggle room. And but there was no communication. It was like he's in charge, he's gonna make the decision. He made the decision, and then it was completely the wrong decision because 2022 came, the
Mm.
rates ran off on him, and then I think he had to sell the asset this year. And like from when I was like kind of looking at the numbers, and now that I have more of an operator hat on, I'm like, wow, that project probably went really, really close to us maybe losing 100% of the principal. Like we made an okay return, but it was very, very close given the numbers and the financials and the fact that the bridge loan was coming up due, and there was no chance of him refining given the rates where they're at now. They probably got, saved by someone that needed to just close at the end of the year type of thing. So it's just treating the investors with respect. Like I don't I think there's a superiority complex
Mhm.
sometimes where,
Yeah.
hey, I'm the operator,
Right.
but because of my relationship with some of my investors, I feel like I learned so much more from my investors than from, other people. Like I have guys who are, 60, 70 years old and they've invested in real estate for 40 years. So I'll go to them with a deal and they give me 4 decades of advice.
Yeah.
And like it would be so stupid of me saying, well, I know better because I'm the one putting together this deal. So stuff like that I think is really important.
Yeah. No, absolutely. Sounds like you guys got a good system with communication with your investors, and I feel like that is it's hard to put together, but once you do it, it's the investors will definitely be appreciative of that. And I just Googled the Muffin Monster, by the way. It is called Muffin Monster. That is the name
I
of the
told
thing.
you.
So you
So
learn something new every day.
imagine how I felt writing an investor communication and saying our distributions are half this quarter because the muffin monster.
Because of the Muffin Monster.
It was
Right
not a good feeling.
on. All right, man. Well, that wraps up the first 15 minutes of the show. So it's time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with education. Could be any form. Could be books, movies, Netflix shows, whatever. Just give me two recommendations. One for general life wisdom, and then one for real estate.
General life wisdom is two pieces of advice. I would always say put yourself in the other person's shoes type of thing. It's always so easy to jump to conclusions. Like I have I had a business partner who went through like a very trying situation family wise,
Hmm.
and it was a situation that no parent should ever go through.
Mm.
And like for 9 months, he was not in the business, and he is our head of operations. So there was never one word of like like, hey, can you do more? It was never that. It was so just always put family first and put yourself in the other person's shoes. In terms of
So
real
real
estate
quick, I like that piece of advice. That's really good. So we're looking for like a recommendation of a book or movie or whatever for general life wisdom or real estate.
So I'm gonna give a selfless plug
Okay,
then for
let's do
my
it.
book.
Yep,
The Alternative Investment Almanac: Expert Insights on Building Personal Wealth in Non-Traditional Ways.
cool.
Um, I think it's an excellent primer for real estate investing because I cover nine asset classes in that book. Everything from multifamily to mobile home parks to self-storages. The purpose of that book was written that it was a quick synapse of the actual asset class, and it goes into two Q&As with an investor from that asset class. So you get to see the same questions answered by a mobile home park investor, as a self-storage investor, as an apartment building investor. And I am one of the least promotional people you'll ever meet. So there's a section of basically like bad actors in every single asset class. So it's not to say that, any asset class is better than any other one, but it says like, hey, watch out for these signs because this was a Ponzi scheme in this space and this was a Ponzi scheme in that space. So it's a very unpromotional book on real estate investing. So I would probably put that there. And then another just forum that I would recommend is just networking with other investors. It's so important. I know people say, well, as an LP, it's 100% passive. Like, quite frankly, I think that's just BS. You really, if you're not willing to network with at least, I like to say, get on a call with five investors once a quarter. That's not a lot. That's 20 calls. It's not crazy. You will get so much more perspective, unbiased information. You'll have such a good sense of what's going on, and you don't need to do more than that.
Yeah,
So those are my two big pieces of advice. The book that I wrote, The Alternative Investment Almanac, and then just old school networking with other investors.
talk to people. I like it. You're the first person that actually said go to two people and have conversations. I feel like that is a good answer for that question because I personally learn more just from talking to people who are doing it than I do when reading a book. Even though books can be pretty comprehensive, it's just it sticks in my mind more when I have that actual conversation. So it's a good piece of advice. All right, I'm going to move us on to the next question. This is for your younger self. So let's go back to the Dennis who was just approaching his brother way back in the day and saying, "Hey, man, give me your shittiest property." Go back to him, look him in the eye, give him one piece of advice moving forward.
I think follow what I truly actually like. Like the old adage, if you do what you love, you don't work a day in your life.
Mm,
I'm sure I butchered that quote one way or
yeah,
another.
it's close enough.
Yeah, I got comfy with my government job really,
Yeah.
really quick. And I think the biggest mistake, so I'm a big proponent that you do need to work some kind of shitty job in your life
Mm,
to truly appreciate the entrepreneurship side of it or
mm,
truly appreciate your freedom and stuff like
yeah.
that. Because if you don't work that shitty job, how do you know what you're like working so hard for?
Right.
So I felt like I probably only needed to work for the government for a few years before I earned that shitty job title. And then I would have liked to have I would encourage my younger self to get into commercial real estate sooner in some shape, form, or capacity. I do like the age that I really went full time into it, but at the same time, I felt like I kind of wasted a decade in my 20s that I
Yeah.
would have loved to get back.
Yeah. Yeah. So many people say that. And if I were to answer that question, that would be the same thing. The same answer that I would give because yeah, I worked corporate until I think I was 28, something like that, 29 maybe. And so all my 20s, I was just, going to a job and I wish I had started in real estate earlier. But so that is a message to everybody out there who's listening to this podcast and you haven't done your first deal yet. You're thinking about it. You're on the sidelines. You're like, should I not? This is directly to you. Just go out there and get your first deal done because we all wish we would have started earlier. That is, every investor wishes he started earlier. So this is to you. Go out there, get a deal done. All right, next question is about the U.S. It's a big place. There's a lot of opportunity. Give me the single metro you're most excited about investing in today.
This one's easy. This is my backyard, New Jersey Shore.
Okay.
Our
Is New
hospitality.
Jersey Shore, is that the name of a city?
So okay, so the city, so New Jersey Shore is the coastline
Oh,
of
okay.
New
Okay.
Jersey, and it actually covers the whole state. So we are in a couple of different projects. The most kind of famous area near us would be Asbury Park. That's where
Okay.
like Bruce Springsteen started his music career.
All right. I like that.
It's just a really nice vibe. You get amazing weather there. Um, and it's just a beautiful, beautiful place. It's expensive as hell, so it's not a cheap metro. Ironically, I went to a meetup and they asked this question to the speaker, and the speaker was saying, "Yeah, go to Detroit. Detroit in the next 10 years is blah blah blah." And I'm like, "Look, you're in a place where probably 50 to 75% are new investors. You're in New Jersey. You can't make a deal work here. You're gonna go make a deal work in another state. It's probably unlikely. So the best place to start is actually your backyard. It's either a house hack, do something for yourself where you go live in one of the units. You have to start putting your creativity hat on, but it's not to chase another market. Because every market you go into, you got to put systems in place. You got to have a certain skill set. You have to do all these different things. So I think the answer is a given. It's always your backyard. We're in 4 states right now, so I could have picked any single one of them. But the reason why I picked Jersey Shore is because it's 23 minutes away from my house, and I the way I find properties is not like broker listed properties. It's through relationships, and you're gonna have your most
All right.
relationships in your
I'm
backyard.
gonna jump in there because that is the next question. And so you just mentioned it. Um, every deal starts with getting in contact with the seller. So what is your favorite way to find new leads and get in contact with the seller?
Relationships, not so here's the problem. Everybody always focused on the seller.
Hmm.
And it's not the seller who brings you a deal. It is the people around you that understand what you're trying to actually get done. Like the beach bungalows that we mentioned earlier, that was a deal brought to me by my partner who went to his son went to daycare with the broker's son.
Hmm.
And we ended up getting an exclusive one-on-one offer on this deal.
Hmm.
The affordable housing deal that we've done was my partner who previously purchased a property from this developer.
Hmm.
So the point is, it's not like I'm calling and going to talk to 100 developers or brokers, whatever it is. My job is to become as useful as possible to the people around me. At the same time, actually communicate what I'm actually trying to get done. And as long as I provide value to the people around me, and obviously the people around me are real estate professionals, right? I'm not going to the kids' playground and providing value for the people around you, right? Like you have to make sure that you've actually built a good core around you and then provide them value at the same time. Make sure that you're communicating of what you're actually looking for. And then the deals will actually come to you, which is amazing, and people don't realize that that's where the magic is. And I know you mentioned this earlier about you got to do something. I will also say on top of that, do not be the guy that goes to your local meetup every single month and just saying that, hey, I'm looking for my first deal, and then 6 months later come back and say, hey, I'm looking for my first deal. Because I've had that conversation so many times, and it's the most frustrating conversation because it doesn't matter if you find a good deal or a bad deal. Just take some action because you're gonna learn on your bad deal, like I learned on my bad deal, and everybody's gonna have bad deals, and that's gonna open the door to do more deals. Versus if you're just gonna keep looking for that perfect deal, you're just gonna be that guy, and there is a label, and there's always that guy, and there's always that guy in that meetup, and he's saying the exact same thing, and there's no action from them, and you see him over and over and over again, and you look over and you're like, that's the guy.
That's the guy that's just sitting there doing nothing. Yeah, you don't want to be that guy. You want to be the guy that goes out there and takes imperfect action because you're never really going to find a perfect deal. Every deal, if there's a really good upside, it usually means that there is a problem with that property, and so you're going to have to deal with that problem regardless. So there's never a perfect deal. You just got to go out there and do it. Make sure do your due diligence. Make sure that it pencils, that it makes sense. But once you do that, just get it done. Just buy the property, get a loan, go out there, talk to investors, get some money lined up. And then once you do, you'll be heading down that path and you can call yourself an investor. So I love that. So your answer to that question was relationships. And I like that answer as well
100%.
because everything comes from relationships, especially in real estate. It's a very relationship based business. And that leads us to the last question. You've already mentioned it. Like you suggest just going out there, getting deals done. You're going to get kicked in the face anyways. So you might as well just get something done. So on the topic of getting kicked in the face, not every deal goes the way that we expect it. A lot of times things go a little bit sideways, but that's when we learn our biggest lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
So I think we've talked a lot about I have tons on the affordable housing side, but also I think we mentioned most the hospitality side of things today. So I'll go with that one. One thing I'll say quickly is that no every deal has problems. I think the term in real estate is hair, right? Every deal has tons of hair on it. But the better you and your partners are, the less scary that hair is.
Yeah.
So in our situation with our Bradley Beach, it's more or less if anybody's ever done short-term rental, and especially 9 on one piece of property, you're basically running a hotel.
Mm.
And I did not run hotels in my past. I worked for the government. But my partner ran farmers markets and he
Oh, okay.
ran
That's cool.
25 different farmers markets. And the skill sets that he developed running farmers markets is surprisingly similar to what you would need in hospitality. You got to
Mm.
work with the vendors, you got to bring people out there, you got to help them market their little businesses, you need to negotiate the space, the rent for the space, et cetera, et cetera. And all of a sudden that no longer is a problem. But if I did the deal myself, it would be a huge problem because I would have no idea how to overcome that obstacle. So, like another problem that we had was a month during due diligence on that property, we got all the leases, and every tenant was supposed to be month to month, every single one. The seller thought he was doing us a favor, and he signed leases for every single tenant, $1,000 below market value.
Oh, jeez.
And on top of that, on numbers that don't hit our debt service coverage ratio.
Ooh,
So
man.
it was, I remember the call with my partners, and I'm like, this deal is dead. I was like, I have no idea how we're going to recover from this because we have to submit this to the bank. The leases are done. There's no taking them back, there's no do over. And I remember we spent 6 hours on a call coming up with the solution, but it would not have been a solution I would have come up with myself.
Mm-hmm.
So, like, my point is that's just one example, and any investor that gets on the show will have 6, 7 of these examples. And if they're a lone wolf, great. Hopefully they have their own team or employees, whatever it is. But my biggest learning lesson is that if you put the right partnership with a diverse skill set, like one of our guys is the branding guy, that was the guy who handles the hospitality side. I handled legal, I handled investor relations, I handled a couple of different other things, and then we had a construction guy. There was no problem that seemed overwhelming because A, you're only going to get one out of every three problems. And then B, you at least had a collective team to actually go through that problem and come up with the best solution. So
Yeah.
that basically my solution. Otherwise, you'll just find a roadblock, and there's a
Right.
reason not to do that deal. And then versus like, hey, we really want to still get this deal done. This is a shitty situation, but how do we overcome it?
Yeah. Yeah. Having somebody there to talk with in the partner, having a partnership where there's another person, another mind that you can speak with and bounce ideas off of and come up with solutions. It is so beneficial and important. It is difficult to find good partners, and you got to go into them very, with eyes wide open, and everybody has to understand what their roles are and what to expect. But Yeah, I am a super huge advocate of partnerships because it's amazing what you get from a partnership, and it's not just um division of labor. It's so much more. Even the motivation, like I am more motivated to work on deals that I have partners, than when it's just my own property that I own, because I get to talk with somebody, I get to come up with solutions. It's fun. So um biggest lesson learned sounds good. Well, what was the lesson? Was it have partnerships, be
Yeah.
open to solving
Yeah.
problems?
I would say have partnerships that make sense. Too many
Okay.
people like to partner with people like themselves. But
Mm,
if you partner with
yes.
diverse skill sets,
Yeah.
then no problem is going to be think because there's going to be something that overpasses. I also want to throw one last thing about partnerships. Date your partner first.
Yeah.
Like treat your partner like a marriage, because once you get into that operating agreement with them or that property with them, you are married to your partner,
Yeah.
in one way or another. So don't do a spontaneous partnership. That's a bad idea. But you work like with the affordable housing. I talked to my future partner for like 2 years straight on a weekly basis. And that's what made me comfortable with going in on a $5 million deal with him. So I think too many people are like, oh, I went out to this conference and we hit it off. So now we're going out and buying a $20 million building. Well, that sounds like a disaster waiting to happen. So just date your partner for a little bit first. Make sure it's the right fit. Have uncomfortable conversations with your partner. Like the same things you want to tell your kids before they get married. Have that guy say it's exactly the same thing.
Yeah, that's good advice. All right, that leads us to the last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. It's a two-parter. Where can they find you? And then what can they expect when they reach out?
Sure. Easiest place is sihcapitalgroup.com. So it's SIH Capital with an A, group.com. You'll see contact me, or you could just email me directly. My first name is Denis, so Dennis with one N at sihcapitalgroup.com. You can find my book on Amazon. I genuinely I love the investor part. There's no investor relations people at SIH Capital Group. It's me. That's my role. So reach out. Love to have a conversation with you. And Gabe, thank you so much for having me on.
Yeah, absolutely. Dennis, thanks for hopping on the show. It's been a pleasure. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe with realestateinvestingclub.com. If you want to support the show, just give us a review on Apple or whatever you're listening to this on. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.